Well, I think one is related specifically to my role as a consultant and as a direct advisor to the companies that we work with, be they traditional financial institutions or up-and-coming fintechs. But the other industry roles are really about bringing the ecosystem together, knowledge sharing, advocacy towards the government. So they play fundamentally different roles with respect to how the ecosystem grows. One is one-to-one, working directly with the companies to advise them. The other is creating a broader infrastructure and ecosystem for all the fintech companies to thrive, to collaborate, and to engage better with investors, with customers, as well as with regulators and the government. Well, I think in order for innovation to evolve in a very structured way, in a sustainable way, the government actually needs to play a key role in supporting, promoting, and funding incubators, accelerator programs, basically ecosystems or areas where fintechs can come together and thrive. If you look at different markets like Singapore and Hong Kong, even other markets in Southeast Asia like Malaysia, Indonesia, they all have pretty rich fintech ecosystems, incubator labs, places where new companies can go, start up, create different ideas, get support for funding for their business, get support around premises, and then a lot of events to help create visibility with their target customers. So when you create that kind of an ecosystem, it becomes a lot more straightforward for new fintechs that are looking for customers to find the incumbent institutions that are looking for innovation. So I do think there is a very important role for the government to play in terms of supporting the development of both sides of the equation. Well, it doesn't matter what business you are in. At the end of the day, your goal is to make money, to receive money from your customers, to potentially pay it to your suppliers. Maybe you need a loan to finance your business. That's where the fin comes into everything, because all of the fintech solutions are creating either marketplaces, platforms, ecosystems, channels, payment networks. The whole idea is, I would say fintech is crucial to the growth of an economy, and whether it's enabling a traditional bank or a financial institution to become more digital for their customers, or it's about connecting an SME and customer ecosystem to transact more simply, more conveniently, and at a lower cost, I think it's very important for these small businesses and startups to be very aware of how they can leverage these solutions to make their businesses more streamlined and more efficient, and ultimately benefit their end customers. Well, I think Asia structurally is at a better place than you see in the West. I think there's a lot of economic tailwinds that have helped propel this ecosystem along. But when you compare it to markets like the United States and Europe, Asia actually is very different. You don't have one homogeneous Asia. I was talking about this in my presentation. The whole Asian economy is very disparate in terms of market structure. And I think one thing that Asia does have going for it is a very long tail of newly arising, affluent, emerging, and middle class, which the West has gone through a long time ago. However, that part of the population still doesn't have easily, readily access to financial services, and that's driving the growth of financial inclusion and access. And I think at the back of every fintech's mind, particularly in markets like Bangladesh or India or Indonesia, is they see a big population that ultimately has strong demand for the solutions that the fintech providers are developing. And that provides a really strong impetus to growth and further innovation in the market, because many of the traditional financial institutions are at present not able to service that long tail consumer segment, which I think the fintechs recognize is a huge opportunity. Well, I think if you go to many emerging markets or frontier markets around the world, at the top of the government agenda for why they want to push fintech is the whole idea of financial inclusion, unbanked populations, small businesses that can't get access to credit, rural populace that basically don't have that convenient access to a traditional bank. I think what's very important is, while the government of any nation may espouse the benefits of doing this, they also need to put into action the right facilitation for companies to address it. Because the reality is, often when you look after a long tail or remote customer segment, it becomes a bit more expensive and difficult to do it. And inevitably in the world of finance, the clients or customers that are making you the most money tend to be the ones that are the largest, with the most wealth. They can put the money to work. So we talk about this idea of inclusion. It's important to do it, but I think the regulators need to provide the infrastructure and support so companies that want to do it can do it while also being sustainably profitable, because they shouldn't have to burn their capital to do it. Or there should be funding support mechanisms provided by the government to further facilitate the ability for those customer groups that can't get access to the services to now get access to it by way of maybe subsidies or grants that go towards firms trying to address a very acute problem in an economy. So it's nice to look at a company and say do it by yourself, but the reality is if you want to address this unbanked or underbanked segment, it does require a lot of resources to do it, a lot of infrastructure to support to do it, and what I would say is a regulatory environment that doesn't make it too difficult for companies to target these kind of customer segments. Otherwise, it becomes way too complicated and way too costly, and it doesn't bode well for a business model that ultimately can become profitable in the long term. Well, again, I think it's very important to look at what is the needs of the Bangladeshi people. And once you understand the customer needs, you develop the solutions around that. I tend to find that a lot of fintechs, especially in developed markets, are created, and we say it's like a solution trying to find a problem. And we often find that is not the best solution for the market. They're making up problems that aren't necessarily as big as people might think they are. It's very important when trying to create a new solution in a market like Bangladesh to understand the real customer pain points, whether they be individuals or families or small businesses. Where are people having the most difficulty with their financial services? And based on that, how do you develop a solution that can address this pain point while also, being profitable in the process? Because again, I think we've come through this environment where it was so easy in the past few years to raise money, get capital, and then just build any business you wanted. We now are in an environment where interest rates have crept up, cost of funding is a lot higher, and investors are looking for businesses with real economic value. And the real economic value will always come from your customers. So the most important thing is if you're looking at creating the next big solution in Bangladesh, really understand what your customers not only want, but what they need and what they are prepared to pay for. And those three things, once you've mastered that, developing a solution around it should put you in a good position vis-a-vis other companies. And I think the final thing is you also need to understand, are other people doing it? Is there some white space or area where there is a competitive gap? Because otherwise, we tend to find if all the fintechs are doing similar things, we end up in a situation called race to the bottom, and they're all competing with each other to offer the lowest price, and then guess what? The unit economics of the business are not sustainable. So find those niche spaces. They do exist. They're not easy to find, but when you do find them, they can be very rewarding.